Okay, so we talked about the back test, and we talked about how putting them on a daily basis, putting them on every single day, having a max count of infinity, but you're taking these off every 7 days. So the max you'd have on is at 5 or 6 at any given time. And so this is the snapshot of that backtest study that I already showed you, right? You're putting one on every single day. I want to compare putting on one on every day to putting them on sequentially. So in other words, you're putting one on, and then you're not putting another one on until you take that one off. And so the maximum number that you'll have on at any given time is 1. Well, look at the difference here. You've got a P&L per trade of $183 on the putting one on every single day. You've got a P&L per trade that's higher of $228 when you're putting them on sequentially. Your total P&L is much less, but that's because you're trading a lot less. In this case, you have 743 trades. In this case, you only have 162 trades. Look at your P&L per day. And over here, putting one on every day is $33.50, where your P&L per day here is $41. The number of trades is lower. And look at the win rate. Okay, your win rate goes from 56 up to 59% when you're just putting one on, taking it off, and then putting another one on, as to just putting one on and kind of stacking those over and over. Here's why that is the case. If we go back to this study where we had those 10 losers in a row, look at February 6th. The price of SPX was at $22.91 when we put this one on. Then we put one on the next day. Well, look at the price. It's at $22.91. Same exact price. So we're basically stacking two trades at the very same price level. Then we put one on again on February 8th. Well, market's at $22.95. So not much different. That's 3 trades stacked at basically the exact same price level. And so what happens is when the price made a big move, all 3 of those got stopped out, right? So the key to putting these on is, what we do at Navigation Trading is a little bit in between these two. We don't necessarily put one on every day just to put it on that day, and we don't put one on and wait till we take it off. We actually ladder into these, but we want to ladder into these at different price points. Okay, so you're spreading out your break-evens. You're spreading out your different price points and time cycles of when you're putting these on. So we always enter between 6 and 8 days to expiration, but we're spreading out the price point in the underlying, SPX or RUT that we're putting the trade on at. Okay, so that was Iron Condors. Same exact thing for double calendars. This is showing, just putting one on every single day, no matter what, you're putting it on, regardless of price level. $28 per day versus doing it sequential, $44 a day. P&L per trade, $155. P&L per trade, $243. The reason these stats on this backtest are a little bit better is because you're not stacking them up at the same price level. You're spreading them out when you're only putting on one at a time. So you're only putting one on basically every, depending on if you get stopped out or days to expiration, every 5 days on average. The price is naturally going to be spread out more, so you're not concentrating on one specific price level. So that's the difference, and that's one of the keys, depending on how you want to trade these. If you're only going to trade one at a time, this is what you're looking at. You're putting one on. If you get stopped out, put on another one. Or if it gets down to 1 day's expiration, take it off and put on another one. So you're only having one on at a time. And you can see, 166 trades, so the number of occurrences isn't as high, but that's getting in a different price level, so you're going to benefit from that as well.